Hello, good afternoon everyone, and welcome to this specially arranged session where we'll be looking at the markets and trying to assess for opportunities prior to the U.S. unemployment report that will be due out in about 5 minutes. It's otherwise called the U.S. non-farm payrolls. It's called the new U.S. non-farm payrolls because they've excluded the farmers from this unemployment rate report. There's a huge farming community in America, so they don't exclude the farmers. So they don't include the farmers in the report. That's why it's called U.S. non-farm payrolls, or otherwise the U.S. unemployment rate. Okay, so let's get ready for what's going to happen in 5 minutes or in about 4 minutes, because we want to be prepared. So as usual, you always start off your day looking at the economic calendar. I tend to look at the calendar for the whole week on Monday and of course every day. We're looking at the calendar today. We know that at 2:30 Nigerian time, we have the US unemployment rate and also the Canadian unemployment rate at the same time. So we have both the US unemployment rate and the Canadian unemployment rate due out at the same time. And as we know, the markets tend to trend sideways prior to the last report of high importance. This unemployment figures are the last report of high importance today, and we know there's a high probability of the market trending sideways prior to this report. So you want to avoid or keep out of the markets prior to this report. But obviously, a couple of minutes prior to the report, you want to get ready because the market could possibly react very quickly to the report, and you need to be prepared and ready with whatever strategy you're about to trade with in case the market reacts quickly. So let's have a look at the markets. We'll start with the Euro-US dollar, which is the main market I use to teach, and the main one I always advise clients to start with. And again, obviously, it depends on your money management, i.e. depends on your capital, how many markets you can trade. So you need to know money management well and know how to apply money management well. That determines how many markets you're trading. But if you're trading with $500 or less, you want to stick to one market, preferably the Euro-US dollar. And looking at the Euro-US dollar here, we can see the market has been trending sideways, which is what we expected prior to the report. And you can see these two white lines here I have. The two white lines there just signify the upper part of the sideways trend and the lower part of the sideways trend. The yellow line here is my pivot point, which is right within the sideways trend, and you always want to avoid trading within the sideways trend. Luckily, the first resistance is outside the sideways trend and the first support. Well, the first support is quite far away, so for the report that is due out shortly, I've placed a pending sell order just below the sideways trend. The market itself hasn't formed the market support, so I'm just selling just below the market sideways trend. And then for the buy, I'm actually going for the first resistance, just above the first resistance. But you can see that the market has been trending sideways prior to the report. Looking at the other markets, you can see that's the dollar Swiss franc. That too has been trending sideways. And again, you can see anytime you see my white lines, that's just marking out the sideways trend for the market. And again, you can see the pivot point is within the sideways trend, but the first resistance and the first support are outside the sideways trend. See pound dollar has been trending sideways. So you can see all the markets have been trending sideways prior to the report, but pound dollar has formed the market support. So I have a pending sell order just below the market support. So that goes for all the markets, including oil. So you can see oil has been trending sideways. But let's go back to Euro-US dollar. The report is going to be announced any minute from now. So we want to see how the market will react to the report. Again, as traders, you're not really concerned whether the unemployment rate has gone up or gone down or what the exact figure is. It is how the market reacts that you want to see. And you can see how the market reacted very quickly to the report. You can see, okay, actually, this is actually a good thing to let you be aware of. You can have slippage in the market. There's something we call slippage in the market, whereby when the market, it takes your order further from where you placed your order. And this slippage can occur in periods of increased activity, just like we've seen here with the Euro-US dollar. So when there's increased activity in the markets, especially around times of economic reports, you can get slippage. So you can see, although I had my sell order below the sideways trend, it's taking me into the market, a bit further from where I wanted to enter the market, and that's called slippage. And this slippage can occur during periods of high activity, just like we've seen now in the market. So you always have to be wary about that, because obviously I'd like to risk 20 pips on my trade. So you can see the market has taken me into the market at a different point in the market. So my entry point now is 2321 instead of 2338. So I need to adjust my stop loss to reflect that. So it's still 20 pips. So I'll right click over my live trade. I will then modify the order, and then I'll change that to 2341, because 2341 is now then 20 pips stop loss, because obviously I only risk 20 pips. So again, be aware of that you can have slippage in the market, and when slippage occurs, do remember you might need to move your stop loss to adjust for the slippage. And another part of my plan is that obviously when the market falls 30 pips in the direction I want to trade, I will then move my stop to the opening level, and halfway will be 30 pips, so it hasn't fallen 30 pips yet, so I'll leave it at that. I just want to have a look at the other. I actually have 4 trading accounts I'm trading, so I need to adjust the stops. I need to adjust the stops on the other accounts, because because of the slippage, they've all come entered at the wrong point, so I need to adjust all of them. So I need to adjust that to 2341. Because the plan is to risk 20 pips. I don't want to risk more than 20 pips. Okay, if you have any questions, do click the hand button or send your questions to the question box. I'll give this a couple of minutes and then we'll end the session. So basically it's just to show you all how you need to get ready prior to a report of high importance, how the market can react very quickly during a report of high importance. So you need to be quick, and you can see how the market reacted sharply. So that isn't the time you want to be deciding what to do with the market. You need to have decided beforehand. Obviously, whatever you do, you always have to remember money management. One thing you can be sure of in trading is losses. So, you can always be guaranteed that you're going to have losses. So the key is to make sure that, whatever you do, whatever trade you place, you apply good money management, because that's the key to success is good money management. You need to make sure you know how much you're risking per pip. Obviously, you need to have a plan. You need to know what you're doing. And if you do all that, then you find trading will be stress-free. Okay, any questions, comments? Like I say, if you have any questions, do click the hand button or send your questions through to the question box. And like I said, we'll be ending the session shortly so I can concentrate on my live trade. So we can see that's the euro US dollar. It's fallen. That's the dollar Swiss franc that's gone up. Let's go to oil. So there hasn't been much reaction in oil. I'll just check the other markets I'm trading, or the other accounts, sorry. Like I say, I have 4 separate accounts, which gives me the opportunity to trade various markets at various risks. But again, that's all within my money management, so to speak. So again, money management is the key to success in trading. So that's oil. Not much is happening there with oil. I'll just have a quick look at all the markets and then we probably will end the session. So that's oil, trending sideways but not gone much. That's DAX. I didn't do anything with DAX because it was trending sideways. The first resistance and the pivot point were within the sideways trend, so I just ignored that. Same with FTSE. FTSE, the first resistance and the pivot point are caught up within the sideways trend, so I just ignored that. The Dow Jones, I've got pending buy order just above the first resistance, which is outside the sideways trend. And that's the dollar, Canadian dollar, the USD, Canadian dollar. Again, that one, I didn't have a pending buy order because the first resistance was within the sideways trend. You don't trade with R2, so I only had a pending sell order below the pivot point. That's Aussie US dollar. Again, you can see the slippage with Aussie US dollar. So I had a pending sell order just below the S1, but you can see where it's taking my order beyond the point of entry. So you had slippage there. So again, I have to adjust that too. So I have to adjust that to 8341. 8341. Just to account for the slippage. So that's dollar, New Zealand dollar USD, and you can see the US dollar yen, dollar yen, that's gone up. That's the euro yen. That's the pound dollar. You can see the pound dollar has broken the support, taken my order and it's gone back up. Let's go to euro USD. So you can see the euro USD has now fallen halfway towards my target. It's fallen 34 pips now. So the euro USD has fallen 34 pips. So now that it's falling halfway towards my target, which is 60 pips, I'll now move my order to the entry level of 2321. So at least at this point I won't be risking any money. So I've moved my stop to the entry level. So I'm not risking any money on the euro USD anymore. And I'll also delete my pending buy order above the first resistance because that's not needed anymore. I'm just going to stick to this sell order. Obviously, if I lose out on this sell order, I'm sorry, if the market goes back up and takes me out, I will not lose any money on this trade. But it'll probably be the last trade for me today on the euro USD because as you can see, the market has now broken the first support, although it could potentially form a market support here. So I'll just change the low point to that low point there. Let's see, so the low is 2278. So I'll just change that. 2278. 2278. And let's see, what's that low? That's 2278. So that's a potential market support about to form. I have to wait for that candlestick to finish forming. And if that candlestick finished forming, then we've now got a market support there. I'll just put a text there. So that's a market support. So that could be another potential point of entry if I need to get into the market again. So that's a market support. There we go. So that's a market support that has formed on the Euro USD. So like I said, just to recap, I had a sell order just before the report came out. The report came out, the market fell, took my sell order. There was a bit of slippage, but I adjusted my trade to account for the slippage. The market has now fallen halfway towards my target of 60 pips, so I've moved my stop loss to the opening level. So I'm not risking any money on this trade. So the market can either go back up and take me out of the trade, but I won't lose any money on this trade. But if it continues to fall, then I'll wait for it to get to my 60 pips limit. And like I said, this will be my last trade for today on the Euro USD. Okay, that's it. Any questions before we all go for lunch and I concentrate on my trades? No questions. Brilliant. So have a good day, everyone. Look after your trades. Remember, good money management and discipline. That's the key to success as a trader. Take care and God bless.